Welcome to the Perspectives on IBC series, where advisor Chris Tormey joins me in a discussion on all things related to the infinite banking concept. In this educational series, you'll learn the basics of IBC and how you can recapture the financing function in your life so you can gain more control and freedom of your wealth. So welcome to this week's episode with Chris Tormey. We're on episode number 8 of the foundations of IBC. And we've covered a ton of ground thus far, and hopefully you've been tracking along with this series. And today we're going to get into some more practical applications of IBC, especially around related to business owners. You know, business owners are certainly a unique breed, in this environment. It certainly creates other complexities and needs. And so we're going to cover how IBC can be a really tremendous tool and resource for business owners. So Chris, thanks for joining me today.
Tom, great to be here. Thanks so much. Really looking forward to today's conversation. I just think the business owner community and IBC fit beautifully.
Yeah, and when we go back to some of the earlier discussions we've had around this, obviously we're talking IBC is sort of a cash flow management system, right? And strategy. It's not just life insurance, but it helps manage cash flow. And obviously we're going to go into personal uses of it, but from a business owner, cash flow is a pretty important thing to manage, and there's potentially a lot of moving parts to it.
Yeah, I think the biggest two factors as a business owner are probably taxes and figuring out ways and places to establish a savings process so that your entire wealth isn't 100% embedded in the business value or the business productivity, cash flow productivity for you. And those are two areas that are handled in corporate America well upstream from what you see in your paycheck. Whereas for business owners, you're in a situation where you receive the gross pay, at least that's the way it comes in the door, and you've got to be very mindful of how to deal with taxes, which are ongoing every year, and how to deal with savings, which is something that could be an important aspect of your exit strategy if in fact your business doesn't sell for a very high multiple or what have you to support a retirement.
Yeah, and for most people, and this is, there might be different opinions on this, but I think for most business owners, they'd probably argue their biggest asset is their business, right? And they're going to probably try to plow as much money back into it, profitability, back into the business that they own and control, and probably it certainly, in my mind, reduces some of the risks associated with it. And they may have less understanding of where else to put it, right? Whether it be stocks, bonds, whatever the situation, probably is not up their alley because they're just so ingrained in their business and trying to make profit there and sort of keep that engine churning, right?
Yeah, absolutely. And let's start with taxes, if you don't mind. I'll just give you a personal story. So I'm a business owner. Financial advisory is my practice, and I work at a registered investment advisory firm, but it's pretty much my own practice that I run. And in April 2023, there was a big tax bill, no penalties because we prepaid during the course of the year in 2022, but a big tax bill from a good year and anticipated taxes for 2023. So what a perfect place, which I did, to pull from my whole life policy to pay the government, to be on time with all that, and another payment coming in June 15th. Right in between, I expect a fairly good bit of income from some business I've been working on for a long time. And so that'll be used to pay back the April payments and set up for a June payment. I just can't imagine what else could work so well, except for perhaps you could say a checking account. But checking account, in my mind, has got so much spending associated with it that it's just nice to have a place for taxes and savings that's separate from that and removed.
Yeah, and some people would just personal level, like just paying cash for things, just easier, right? But what gets lost in this is just like anything we talk about IBC, it's thinking long term. Is in your scenario, the way you're positioning it, Chris, is building up savings somewhere else, right? Long term that you're going to eventually be able to access right? We're just funneling some money here to be able to fund taxes. But that money is piling up there as opposed to just handing off to the IRS, right? So that
Exactly.
the benefit of all that is cumulative, and it takes time, and you'll start seeing it. But in the given year, sometimes it can easily get lost, right? That what's a really big benefit? I'm going to just pay it anyway. Well, the bigger win is that you're building up an alternative source to save money that's, immune from taxes and can grow compounded uninterrupted for long periods of time.
Yeah, if you compare it to a checking account, in a checking account, while the money's there, there's not much growth at all. Any growth is taxable. However, when you pull the money, there's no string attached or cost or loan associated. You just put your money, you pull it, and you go pay the IRS. So for those short periods of time where you need the money, like in my example, between April 15th and let's say June 1st, the bank account's just so easy to grab it and pay, and then replenish when whatever business is coming in comes in. With the insurance company, for that short bit of time, 5 weeks, you're going to be in a situation where you owe some loan rate, but your cash value continues growing all the way through. So when you stand on, 20 years out or 30 years out and look backwards, the short time periods of weeks that you did a borrow are you're unable to even see the cost related to that compared to the 20 years of compounding growth. So you might have 20 months or even 10 months of borrows when you add them all up over the course of 20 years. But, your entire the balance, the entire, 19 years or 18 years of growth is there for you to keep. And you see that reflected in your cash value and in your death benefit.
Yeah. And to your point, it just takes sort of a deeper thought around the short-term versus long-term aspect of it. And so once you start seeing, and that's, I think most people have come to understand that IBC is a good part of their financial lives, are thinking that way. They're thinking that long-term. They're thinking, and for business owners, private ones, a lot of them are thinking long-term. This is a business that I'm growing long-term and maybe even potentially stays in their families and can be transferred over and to the next generation to maybe run, or sell. And same with the life insurance asset, as you're building this up as a pool of accessible liquid dollars that is going to be there long-term too while you're alive and can be transferred over when you pass.
Absolutely.
So it kind of has a similar sort of model to it. And so you just got to get through the short-term thinking sometimes. And we were guilty of it too. I get it. It's not, but I just want to make sure to point that out because
Sure.
When you think long-term, it's can be very powerful.
Well, and the short-term thinking aspect of the death benefit, like the catastrophic risk of actually passing away too soon, much more damaging if both your source of income and your entire asset, or maybe 80% or 90% of your assets, like if somebody passes away, their 401k doesn't drop that same day. But when a business owner passes away, typically for many business owners, the valuation on that business drops dramatically. But at the same time, the IRS comes in and looks backwards to value that business, and there could be tax ramifications around that, as well as value loss. So having that death benefit step in, I'm often amazed when I meet business owners who just don't have adequate death benefit to cover the value of that business. And a big portion of that death benefit could be, given to you pretty cheaply or for free in the form of an IBC type policy.
Yeah, no, definitely a good point. So obviously, good example with the sort of the way you described the sort of use of this sort of strategy to help, say, fund, certain expenses in the business, taxes being kind of a major one. But obviously, in the normal cycle of businesses, and they're all different shapes and sizes, I want to just kind of shift gears and talk about a little bit like just the cash flow management, right? Because as an employee, when you're working as an employee, and there's certainly going to be some folks here listening or maybe don't have businesses, you get a paycheck, right? And that it's a steady flow of money coming in, and hopefully it makes it easier to budget and manage cash flow because you kind of know what's coming in, and for the most part, know what's going out or expected to go out. Well, for businesses, it's not always like that. I mean, right? There's some businesses that make, the vast majority of their revenue within like a month or two of the year.
Yeah.
But they still have things like payroll and rent and all those expenses. So they got to have a mechanism to smooth over the misalignment sometimes of their inflows and outflows. And that's why, tools like this, they need. So what do they typically do, Chris, to manage that?
Well, I mean, they'll typically keep a very, very large cash balance in their checking account. That's what they tend to do to protect themselves. And we just think there's better ways to go about that. Anything else you're thinking about?
Well, so the other aspect, so that's absolutely true. And that may not be earning all that much. And in a given year may not feel that impactful, but over long periods of time, not earning on those dollars can add up in huge opportunity costs. But the other side of it is sometimes they have to take lines of credit out from banks, right? They're going to rely on banks to, take those line of credits to smooth and be able to pay their suppliers, whatever the situation is where they need cash or pay their employees before revenue comes in. So they're relying on banks for that. And they don't have to give it, right? The line of credit's not guaranteed. We've heard enough about certain companies that maybe get into a bind and the banks are securing their assets of the business, right? They're at risk now, right? If something happens in the business, they can't, fund these sorts of things. So it puts the banks in a potentially driver's seat position, to liquidate and take over somebody's business, right?
Absolutely.
And
remember, of course, with banks, they view the assets, the hard assets, and what the resale price might be of those assets, whereas the business owner understands what those assets can produce in cash flow over time. So they very much have a very different perspective about the business. So when you have the banking control, you could have an issue where you lose your cash flow potential from those assets because they're gone or somehow compromised. So very important to be your own banker, at least for a portion of your operations and what's going on. I mean, I think Nelson Nash would say for 100% of, and that's worth mentioning that Nelson Nash very much comes from a business owner mentality. He was a forester for many years. That's what gave him the long-term view of everything. Takes a while for a seed to become a tree. And it also gave him that understanding that when the chips are down, when an area is in trouble, even when the bank itself is in trouble, but not you, all of a sudden the rules can change. But if you're your own banker, and as long as you're a responsible banker and they're able to understand where the money eventually is going to come from, it's a much more stable business situation.
Yeah, and that's what before we started recording this. I mean, we're talking about that IBC. It's like acts as a business. It's just the banking business. And so for most folks, they're just sort of accustomed, certain business owners are accustomed to going to an actual bank, right? There's a lot of entities that provide banking services, but typically banks are what people associate with that. And so that's the fallback, right? But we know that could, and I mean, we're not saying that they're bad people or, they provide a service, but obviously, it takes a little bit of control away from the business owner. So this is to that point, if you see that is a potential problem or issue and cost you money, well, you could create that. That's what this IBC environment is, to create your own sort of privatized bank that you own and control that can help serve your businesses for all those sort of banking needs and come with all those other fun things like tax benefits and, guaranteed, cash values and that those are all those things that are just inherent to, whole life insurance.
Yeah. And other riders like a waiver of premium in a disability or in a sickness situation. Because again, usually someone collecting a W-2 paycheck would be missed if they were lost, but it wouldn't typically destroy the business. Whereas a business owner, a very different situation. So anything around the health and life of a business owner being protected if something happens to them, so valuable. But you bring up another point. So Now they've entered into their second business. So they've got their primary business, a coffee shop, or even bigger, a manufacturer of services or products. But now they've got a banking business as well. Well, that starts to ignite the thinking around other businesses. People. Now I'm thinking W-2 employees. They start their first business, their IBC policy. They start to think like business people, and all of a sudden are interested in something else. The easy thing to talk about is perhaps real estate, but there's also franchises. There's also some passion or skill you have around art or farming or you name it, and all of a sudden now you're thinking you could do that too, and you have to be patient and keep the long term in mind. But not only is IBC great for business owners, IBC is also great in creating business owners with the policy itself and then beyond. So I know you and I both found that with our clients, and it's just so exciting. I do think it's the backbone of America. We're very obsessed since the advent of the 401k with other company values. But really, the magic around the growth in this country, from the 1800s all the way to today, where was Google 20 years ago? It's somebody's idea, or maybe 25 years ago now, somebody's idea. And there's so much of that supports our economy, from labor to new products to superior products to the nature of our country and what keeps us excited about growth. So I don't think it all comes from IBC, but I do think IBC fits with that American spirit, that human spirit, to do better and do more for themselves and for others, or even for others and then themselves.
That's absolutely right, and I couldn't agree more. And for business owners who have gotten into it, and I, even for myself, transitioning from corporate jobs to a business that I own and control, there's some challenges with that too, right? Now you're the decision maker and owning and controlling it, but it's such a freeing environment. That's why I think a lot of people get into business, because they want to own and control their own futures around this and their livelihoods and what they do for their families. And so the concept of IBC and owning that banking function, to your point, sort of is so congruent with that thinking. And that's why I think a lot of them really, once they understand it, they say, wow, this is terrific. It's a terrific complement to what I'm trying to do with my business anyway. And then to your point, maybe I could use it to invest in other businesses or support other businesses. You never know.
Exactly.
Really
and then,
powerful.
We've been talking about single sole proprietors a bit more than partnerships or multi-partner businesses, but many of those, they should have some sort of key man insurance and partnership buyout. They call them buy-sell agreements. And when we don't see those, we make sure very quickly that we get those in place. But most often, more often than not, term life insurance is used for those sorts of buy-sells. And term life insurance works beautifully for that. However, IBC might work even better. Not for the entire amount that's needed to buy out, let's say, a partner who passes away early, but certainly it could do multiple things with that same premium dollar, whereas the term insurance really just covers the catastrophic loss. So there's ways in which IBC can grow into a business strategy from a term insurance situation, and there's also ways in which a business can grow into new businesses right there from the IBC policy itself, but then given that mindset into even more things that are sort of related to the core business, which I do see.
Yeah, absolutely. And obviously we don't have time to go deep into all those different areas, and there's even aspects of executive comp and other sorts of probably a little bit more advanced sort of topics, but there's a lot of possibilities to serve different needs for the business owner there. And
absolutely. Pension plans, employee plans, key man I mentioned, that's a person who maybe becomes a protege to the business itself. The things that an IBC policy or a life policy can deliver to a business owner is really a myriad of things.
Yeah, but that's core, for the fundamental aspects of businesses, and cash flow management, which, this strategy and process really works for personal and business, is to give the owners of this process more control over it. And in this day and age now, when we're recording this, and there's certainly some challenges in some of the small regional banks, and maybe lending slows up in certain areas, that that's always a possibility. And then that could cause some damage to certain companies, and maybe they go bankrupt because they just can't get any more financing. Well, this is where, within the confines of IBC and properly designed whole life insurance policies, that financing is guaranteed, right? To be able to be available, and you get to control the payment terms of it back, and all those things that give you tremendous flexibility as a business owner, and as opposed to being under the hold of the bank's rules, right? Now you got your own rules, and
Exactly.
it's definitely a better position to be in as a business owner.
Yes, it's not a free lease on money, but it is a much better position because you understand the rules fully. They can't be changed on you. There are many aspects to the contract where you're in control, which is just so nice.
Yeah.
And I think this IBC is just one example of so many things that business owners, they just don't teach this in school. So you used to become a business owner because either you had a phenomenal idea that was brand new into the market, or you learned it from a mentor, a parent, or a person, a senior person that is in your environment, whether it's work or personal. But unfortunately, oftentimes they don't know about these other aspects of the business to really make it more efficient and more valuable, even better, as I said before.
Yeah, no, absolutely. And certainly kudos to those who chance to listen to this. And, you're obviously the ones that are actually trying to grow and learn and consider new opportunities for your business, and for, whatever else that you care about, right? And trying to impact with your wealth. So, really appreciate you joining us on this episode, and certainly reach out if you want to talk more about possibilities for your own business. And for the next episode, Chris, we're going to go a little bit more into for the non-business owners, right? A personal level of how others are using, how we're using IBC to build our wealth, protect and build our wealth over the long run, and how we're using it and how it can be used. So really anxious and really excited to talk through that more with you next time.
Really appreciate it. Thank you, Tom. Looking forward to it.
Thanks for listening to this podcast, and hope you're enjoying this series on the infinite banking concept. Next up is part 9, using your IBC policy. In addition to the podcast, I would highly encourage you to get the book, Becoming Your Own Banker by R. Nelson Nash. If you want to discuss how IBC can enhance your financial life, feel free to book a free call with our team. We'd be more than happy to help. Visit perennialpride.com to book your call.